Hello and welcome to VSA Capital and Shanghai Mining Club video with me, Oliver O'Donnell. I'm delighted to be joined today by Mark Brennan, Executive Chairman and founder of Ascendant Resources. We're going to cover the project geology, the regional geology, the recent PEA and current work programs, as well as the company's plans for the future. Mark, thank you for joining me. But before we get into the detail of the project, perhaps you could give us a very quick intro to the company.
Sure, Oliver, and thank you very much to VSA for having us here today. Basically, the Lagoa Salgada project was acquired by the option to acquire Lagoa Salgada was acquired by Ascendant in 2018, and basically it was one of the exciting elements was that I had previous experience when I was running Sierra Metals, where my VP exploration was actually the general manager at Agua Tenidas, having driven that business from 3,500 tons to 13,500 tons, which is another very prolific and very rich deposit on the Iberian Pyrite Belt. So when we were introduced to Lagoa Salgada, I really embraced it, and I saw some very interesting possibilities due to the geophysical work that had been already completed. And so we hopped on board on the premise that we felt that this could be a world-class asset, very substantial in size, and very strong economics, and within a very good jurisdiction. So we had the capability of a team in Portugal with João Barros, who's our president, to really drive a project. What we see here right now is we have a discovery asset that is still in the road to uncovering many more tons of material. And the reality is what we're also doing is we're driving a parallel path of development. So our expectation here is to look to be in production with this asset by mid-25. But once we get through the infill drilling that we're completing now, we should see a lot of substantial exploration upside in terms of the resource that we have today, which is about 28 million tons. It's for a project of 28 million tons, we probably put in about 50,000 meters of drilling. It's a very, very strong yield in terms of drilling to tonnage, and really largely led by the geophysics. So we're very excited. We think this has a potential to be 150 million plus tons. And the economics, as we saw in the previous PA, I think are very exciting.
And you mentioned the Iberian Pyrite Belt, which are based on one of the very large projects that's on there. I think there's about 250 deposits along that belt. You're at the very western end, and some of those big copper projects are at the east. People will know Samphire and Atalaya Mining and London that are close to you. But how does that belt change along it?
Well, it's interesting, as you mentioned. If you look at Samphire, which was previously Trafigura and Mubadala, the reality of Agua Tenidas, basically as you say, there's many deposits there that they've been mining for probably 2,000 years. The reality here is that what we've actually have is we're on the very northwestern tip of the trend, and we actually go underground. This deposit lies about 130 to 150 meters under tertiary cover. So largely one of the major reasons it has not been discovered previously. But in terms of the geology and the location, we're 45 minutes away from Lundin's Neves Corvo project. It's one of the biggest projects on the belt. We're also very close to a project called Aljustrel, which is owned by Almina, which produces about 220 million pounds of zinc equivalent per year. So those are equally about 45 minutes drive from where we are. So what's really interesting here is that what we're seeing on a geological framework is we see the same geology as Agua Tenidas, where we have significant folded structures, massive sulfides, also being augmented by significant stockwork or copper stockwork and copper stringer zones, and so that leads to a very high component of precious metals as well. So from that perspective, what we're seeing a project that we're not a copper project. We're basically a polymetallic project, but at the same point, our revenue per ton on a smelter basis versus our cost per ton are amongst the highest on the belt.
Excellent. And do you think there's a combination of styles that the deposit is similar to analogs with other projects globally, or is it a mixture, and it's a certain part of each project combines to
I would say, if you look at Neves Corvo and Aljustrel, I think we have higher grade material. I think we're shallower. I think we have less deleterious elements than they do. So we're very confident that they will be able to produce a saleable product equal, if not better, to what they have. But if you want to look at the closest analog to us, it's indeed Sandfire. I mean, that Agua project is very similar to ours, and with a very high margin because of the duality of the stockwork and the massive sulfide, and that would be my closest analog to any project globally.
Excellent. And
although I will just add one thing. If we are successful in achieving our goal of getting to 150 million tons, or even a little bit higher than we are, we will be far larger than Agua Tenidas and Sandfire, although we'll have still a very strong resource.
Because even at the moment you stand at about 28 million tons, and if you compare that globally, that's a pretty sizable deposit for a VMS.
Indeed it is, and likewise, not only that, but we again look at the amount of drilling that's been done here. Probably less than 50,000 meters on the whole project since its inception, which means that basically there's been very, very little work to get that 28 million tons. Which it's not necessarily because we're smart, it's because there's a lot of tonnage there, and we believe there's still a lot more to go if the geophysics is anything to go by.
And at the moment, the resource is split over two zones. Perhaps you can sort of describe it.
Yeah, I think one wants to be careful here, right? Because basically, I don't want people to be led astray to think that we have two zones that are far apart. In actual fact, right now they're about 300 meters apart over a strike of 1.7 kilometers. So it's a big long deposit. Yet at the same point, we're only 300 meters apart between what's now the north zone and the south zone. There used to be a middle zone, a central zone. And basically what we did is the south zone has kind of taken over the central zone. And we have a high degree of confidence, actually, that the north zone and the south zone will actually combine at some point.
So when we look at the PEA, which came out relatively recently, how should we look at those numbers? Which parts of it do you think are likely to change? You come out with some very profitable figures. I think the NPV8 at your base case was about 247 million after tax, and you're in the low end of the cost curve. But
indeed, and we had an NPV we had an IRR about 55%, which is very, very healthy. We've seen some really interesting elements as we've been drilling the program, moving to feasibility, and as mentioned, we will complete a feasibility study by the end of the first quarter. And basically, what to your question, we've announced already that we've found some additional copper stockworks in the north. We've found some massive sulfides in the south. And which means, hopefully greater tonnage, greater production as we move forward. But in the short term, what two significant elements we found are, one is we found a transitionary zone in the north, which is basically now what we're deeming a secondary massive sulfide lens, and basically that falls below the Gaussian cap. We have a Gaussian cap, which is high in copper, and then below that we have this zone, and then below that we have the massive sulfides. And through the drilling, we actually now have this copper stringer or stockwork zone below that. But that transitionary or secondary massive sulfide is very, very rich in gold and silver. And so I would expect, on our PEA, I'll expect that the feasibility to PEA will probably lose some elements and some value in certain areas. But we're going to gain substantially as well, and so you can quote me on this. I believe that from the information we're seeing and the drilling we're seeing and such, I think that the PEA is actually going to be surpassed by the feasibility study in terms of value and NPV.
Excellent. Okay, well, we look forward to that then. And how many concentrates are you intending to produce as a?
We'll produce 3 cons. We'll produce a copper, lead, and zinc con.
And how does the value across the metals, obviously, given how quickly metal prices are moving at the moment, it's hard to say on a spot basis.
Yeah.
How does that?
I mean, I think if you break it down, I mean, we're probably 30 to 35% precious metal, silver and gold. We're probably about 30% zinc, about 20% lead, and the balance is copper as it sits today.
And is that consistent over the life of mine, or does it?
No, that's I mean, we're still working on the new mine. We're working on the mine plan, and that based on the old PEA, that was kind of the numbers that we had. I think what you'll find, and what we'll look to do is, because of the extreme endowment that we see in that transitionary zone, below the Gossan and above the massive sulfide, I think you're going to find that we'll produce that as quickly as possible, which will probably be in the first 12 months. And so I think what you'll see is a very, very rapid return on capital. We think that we're looking at capital of about, in the PEA was about $130 million. Given all the activities and the actions going on in the world, we see some risk, and I'll just say we see some risk that potentially that could go maybe as high as 160. We don't think it will, but between 130 and 160, let's call it. But I would think that 2 things: that transitionary zone will pay back a lot of that very quickly, and the second thing is the recoveries of gold and silver are pretty easy, and so anybody who has any questions about metallurgy on the Iberian Pyrite Belt, what they will know is that you can produce gold and silver, no matter where you are, in a pretty standard, easy fashion. So that immediate return on capital coming back through that zone will probably is pretty much a standard production element.
And so is that flow sheet likely to change at the moment? I know you're doing some metallurgical.
We're doing the metallurgy now, and again, we've always said to investors in the street that our objective would be to produce equal or better than our peers, and I think the way it's going right now is we're pretty comfortable with that statement, and we should have that'll be completed by the end of September, I guess. We're pretty comfortable where we are now, but obviously we're going to use the next 3 months to make recoveries and grade even better. But in terms of what I would say is the flow sheet, we've changed the flow sheet a little bit. What we have done is we've domained the lenses better, by the fact that we actually have this transitionary zone, where historically what we were doing, particularly, the mine plan was looking at just a bulk kind of production profile, where now what we're doing is we're actually going to be mining the Gossan and the transitionary zone together, processing that together. And what we'll also do is we'll mine the massive sulfides and potentially the copper stockwork independently as a separate kind of mining endeavor. So from that regard, it's very easy. There's no complication in doing that. But if there's any change to the flow sheet and the mining schedule, the mining plan, that'll probably be it.
And you're also doing some infill drilling at the moment. You announced some assays, which I suppose give investors, a very good reminder of what the deposit is really like. But infill drilling doesn't tend to get that much traction with the market. But I think 109 meters at just over 20% zinc equivalent, 6% zinc and 0.3% copper, 5% lead. These are pretty impressive numbers.
It's very, for infill drilling, right? And we didn't expect that. And as I mentioned to you, we've also found that's in the north and the south. We found traces and not traces, but we found indications of a massive sulfide to the east of on the hanging wall to the east of the wireframe for the stockwork, copper stockwork in the south. So this project is going to yield a lot more than we have today. It's very prolifically endowed, and we just have to go out and drill it. But we're very excited, and we have a very high degree of confidence that we'll see substantially more tonnage being uncovered here.
And I mean, in relation to that upside, how much of the license area that you've currently got is occupied by your existing resource, and how do your other opportunities lie in relation to that?
Well, we have the Venda Nova area, which is where we're doing the feasibility study on, and basically, that's that 1.7 kilometer strike. We publicly announced that we did a DPEM survey, a deep penetrating electromagnetic survey, and we found a very significant high to the northeast. We also have probably if you look at the presentation, we have about 4 other targets running down the east that are highly prospective, and again, through the geophysics, look very, very promising, and have never had a hole drilled in them. So as soon as we complete the infill drilling, which I'm going to expect to complete by the end of July or so, what we're looking at is we'll go full on into a exploration mode. A lot of that we won't be able to bring into the feasibility study in terms of a reserve, but at the same point, we should be able to expand the resource through an inferred mineralization, and we should also be able to show the market, probably by the time the feasibility study is completed. I would hope we can show the market that we already have an expansionary case to come.
And are all of these targets undercover, or is there any outcropping? Because the original
everything's undercover. Everything which is undercover. We're going to drive a ramp right now as it sits between the north and south zones, and then mine the 2 areas independently. Although we do believe they'll converge at depth. And again, we're only down right now. We're down about 200 to 250 meters below the tertiary, below we have the tertiary material for about 150 meters. Then we go down a further 250 meters. And most of these deposits have, 900, 1100 meters of depth, of width. So, we're at the very, very early stages, even with that 28 million tons. And what I would say here is that we're going to see a lot more coming fairly quickly.
And you touched on some of the sort of local infrastructure. What is Portugal like, though, as an operating jurisdiction?
Well, I think it's like many other places. It's really specific to where you are. There are places in Canada, for example, that you can mine easily. There are other places you can't mine easily. Same within Portugal. Conventionally, the north has been more tricky to mine than the south. What we're finding is an advantage of our project being an underground mine. Most of the mines on the pyrite belt are open pit, which causes problems for the local communities. Being underground means we'll be hidden, we'll hide away a lot of the surface kind of issues that a mine brings. But on top of that, you always have to have the local community behind you, no matter what you do. In mining, this is the 4th project that I'll be bringing into production. And the fact is, you always have, if you don't have the local community behind you, the likelihood of getting a mine producing is going to be a very difficult thing, or it'll be a very timely and cost inefficient thing. So what was very interesting is about a month ago, we were awarded the status of a project of national interest. And what was really interesting about this project of national interest is that means that we've been sanctioned by the local communities, we've been sanctioned by the federal government, we've been sanctioned by the regulatory bodies, the environmental agency, the resource and environment departments, in order to say, hey, we're going to give you this status because we believe that this project is going to come to production. We don't see any issues that are going to stop it going to production. So aside from the fact that we have validation, this is the first mining project in Portugal that's received this status. Mostly it's tourist kind of oriented infrastructure projects. But basically what it does is it also means that they will expedite the process to make it very, very efficient. So I think in terms of by having this designation, investors should be very comfortable that we're being welcomed into the community. They like what we're doing, they like who we are, and will help us to get this moving as strongly as we can. Unfortunately, Portugal is suffering, and it's not the most economically wealthy zone in Europe. And the fact is, we see a way, and the government sees a way, that we can bring wealth to the local community with a minimum of disturbance.
Mm. And so, well, with that in mind, what is your permitting process that you've got to go?
So the permitting, we're working on the environmental impact statement now, and basically that'll be submitted in March of next year. We believe between March and September that we'll receive the actual final approval or so. Sorry, this March, the end of the year, excuse me. And we see that we'll be probably starting our construction sometime in the beginning of 2024 to be in production by mid-25.
Excellent. Well, I think that pretty much sums up the project milestones as well. At the moment, what is your funding position? You recently did a placing.
We did a small placement, and basically the objective there was to increase our ownership in the project through the option. But really the objective was to bridge us to a more substantial funding that we're currently working on. And hopefully we'll be able to announce something imminently that I think will be viewed very positively by the market.
Excellent. And when do you expect to complete your earning? What is the structure of that, and what level can you get to?
Well, we're trying to work on a non-dilutive transaction, which hopefully we can have in place with a reasonable cost of capital that we could have in place within the next month or so. Excellent.
Well, look, Mark, that was a roller coaster ride and a very quick overview of the project, but fascinating to hear your thoughts on what you've been up to. Thank you very much for that. If you've liked the video and enjoyed it, please do subscribe and follow.
Wonderful. Oliver, thank you very much for your time. I really appreciate it, and you know where to find us.